People entering the world of investing should expect to take on some level of risk, regardless of what type of investment it is. However, it's the degree of risk that investors are willing to take that can make the difference between the jackpot and misfortune. All kinds of investments carry some sort of risk. Even insured investments come with inflation risk. So, how do you know just how far you're willing to go when it comes to risk, or how far you should go? Well, joining us now to talk more on this is Brendan Caldwell, Director of Caldwell Securities Limited. Brendan, welcome back to Forum Daily.
Thank you, Nima. Thank you for having me back.
Now, there are a lot of people that love to take risk and others that are considered risk adverse. So how can individuals know and understand the amount of risk they can actually take?
Well, I think the first thing they need to do is figure out what they mean by risk. So people will come to us and say, I don't mind taking some risk. And what they mean by that is they just want to make a lot of money. And they've got it backwards in their brain that because investments that grow are more risky than investments that are guaranteed, that they figure that if they take a bunch of risk, they're going to make even more money. And that's not quite how it works. So people need to spend some time thinking about what is it that I'm risking? What is the thing that I am most afraid of losing? And you can say, well, my money. Well, we can unpack that probably as the conversation goes along. But whether you're risking money today or risking money in the future, everybody's taking some sort of risk with whatever decision they make, even if it's a so-called guaranteed investment.
Sounds like a lot to consider, Brendan. So let's break this down for our viewers, especially if they're new to investing. What exactly is risk tolerance?
Well, most people think of it as meaning the market going up or down. So the market was a bit of a swoon this summer, seems to be rebounding. And I think you ask me often, is it a good time to invest? And I say it's always a good time to invest. I get the feeling that if you've got something to invest now, it's probably good to get started because it really does feel like it's rebounding now. Besides that, most people talk about risk tolerance in terms of the market or stocks going up or down. But what is one's tolerance for risking the possibility that you not have enough money or income in the future to live the life that you want to live? That's a risk too, but not one that people generally mean when they talk about their risk tolerance.
Sounds like a very important decision to make. And risk tolerance itself isn't really a black and white issue. There's many levels to risk tolerance. So tell us a little bit more about the types of risk tolerance out there.
Well, again, most people are looking at it from the perspective of what are the chances I'm going to lose my money and never get it back? That's what most real people mean about like risk. And you should seek to minimize that risk. You don't want to lose all your money because once you're out of chips, it's very hard to get back in the game. But if you mean by risk, what is the chances that this could go down 10%, down 5%, even down 20%, you still got most of your chips in the game and the opportunity to come back still exists, particularly if you're adding to your investments every month. And I would say for the large majority of people, particularly people still in their earning years, that adding to their investments a little bit every month, whether it's $100 or $500, $1,000 or $5,000 a month, will make the difference and overcome by the strength of dollar cost averaging, by buying more when the market's down and less when it's up, will actually overcome a lot of the variability that most people mean by when they say risk.
Some important advice there. Now, Brendan, we have a risk tolerance, but we also have risk appetite. So what's the difference here?
Well, risk appetite there, people are thinking about how much risk in terms of this market going up and down they're prepared to take on. And that's largely geared to the question that I always ask new investors is, what do you want to use the money for? Because I believe very strongly all money is meant to be spent. And if you tell me that you want to buy a house in a year or need to repay a loan in 6 months, then your risk appetite, your actual ability to take on market volatility or stock volatility in a reasonably short period of time, I think should be fairly low. But if you tell me I need this for retirement, I intend to pass this along to the next generation, I need this in 10 or 15 or 20 years, or I have no particular plans, I just wish to build it, well, then I don't think you put all your chips on one bet and hope it works out, unless you're watching, you're watching that spot very, very closely and have some control over the wheel. Rather, I think that you need to invest in a way that is geared toward having the money you need and want for the time period in which you are able to invest. If that's a year, you invest one way. If it's 10 or 20 years, you invest another.
Another informative interview, Brendan. Thank you again for your time today on Forum Daily.
Thank you, Nima. Be well.
We'll be right back.